Time for futures in focus. Aluminium prices jumping to $2,000 a metric ton for the first time in almost 3 years. This jump as China calls for cuts to illegal capacity. Joining us now from the CME to discuss, Brian Battle of Performance Trust Capital Partners. Brian, this rally in aluminium, or aluminum as you call it, how much further has it got to run in the short term?
It really, and that is a really good question, because there's a difference between the short term and the long term. As a trading vehicle, it could keep rallying, but there's some news overnight. But first things first, when you're talking about a global commodity, you have to talk about supply, demand, and the price of the dollar. So demand seems to have rallied longer term. After the end of 2016, we had a little bit of a rally, and it's rallied a lot since the Trump election. Everybody got that Trump spike, like, wow, global GDP is going to be great. And we've kind of topped out. The news last night out of China, where they're going to start cutting these illegal smelting, is really sort of an interesting thing, because it depends who the illegal smelter is. So remember, China is still the Red Army. They pick who the winners and losers are, so I'm not sure how real that is. The fact is, though, that there's a lot of supply, and there is a diminishing demand around the world. Certainly in the U.S., demand will diminish because aluminum is a very first world metal, because we use it in pop cans, washing machines, airplanes, and especially cars. And in the U.S., the car market is starting to tip over. I would think that we might be reaching the top long term here on aluminum, but short term, it could still rally.
Brian, let's talk about oil, because there's that meeting taking place in Abu Dhabi. Can OPEC and non-OPEC members remain or sustain their discipline? Do you think they can or not? And what implications does that have for the oil market?
Yeah, on May 25th was the last time we had a high in oil. It was right before the OPEC meeting, and they walked out, and there's no discipline. OPEC is really disorganized, and we have non-OPEC members that have real supply. Certainly South America is starting to fall apart, but the Iranians have lots of oil, and they aren't outside, and they aren't cooperating with anyone. So it looks like oil is stuck in this range between 42 and 52, which it's only a $10 range, but it's a percentage difference. It's a big, it's a 20% difference. Oil has underperformed all year, and I would suspect that will persist, because everybody is pumping as much as they can. Price begets its own supply, so if you can keep it at 50, everyone's going to try meeting that demand. But again, the thing that might be overlooked in both of these conversations is the value of the dollar. The dollar is really cheap. It's been crushed this year, down 8% this year, and a cheap dollar is helping these commodity markets. What's interesting, and what's absolutely antagonizing about the whole thing, is the Federal Reserve is saying, well, we're going to raise rates, and we're going to sell the retained portfolio, and we're going to suck dollars out of the system. And the short interest on the dollar is really high. So I think that everyone, as a tangential thing, all commodities are priced in dollars. Certainly oil is. So I would be watching. I'd watch what the Federal Reserve is going to do, what they're going to say, because as soon as the dollar starts to rally, these commodity markets are going to react instantaneously.